Let's take today's tax question. The question is whether this gentleman should pay down his mortgage or he should rather take that money and invest into something else. The gentleman is 45 years old and wife, I think, is 40 years old. Total household income is $190,000. Two kids. They owe about $440,000 on mortgage, but they earn about, I think, $190,000, and they also have some non-retirement savings of 120,000. Home value is about 620,000. 401k 180,000. IRA and Roth $100,000. 529 college savings plan for children about 50,000, and retirement contribution right now their goal is to put 20% of the income in it, and the mortgage is about 4.25%. So that's all the data we got to review this case. Now, first of all, there are a lot of opportunities with you because one thing you didn't mention is whether you own any kind of a rental property or not, or if you plan on owning a rental property. I would like to know a little bit more about that. Second question I would have for you is what kind of emergency funds you have, because you have, when you say non-retirement savings, is that sitting in cash or money market or stocks? You know, because if it's sitting in money market, that's your emergency savings. You can always access it. But if this money is sitting in the stock market, then you cannot easily access it. So that would be my one concern here. So I would like to know a little bit more about that. And you're doing awesome with building assets. I like that. So, for example, that 529 college savings plan is an asset. Although I'm not really a big fan of 529 plans, although they do work. So they're not bad to have it. So I'm not saying don't have it, but I think they should come a little bit later in the list. There are a lot more things that you can do that can provide way better um, financial efficiency than what 529 plans provide. So that's why I don't really like them at this stage, at this point at least. I like the fact that you already have $180,000, but remember you're approaching 45. So I don't know if you have ever actually done any kind of calculations for your financial freedom. I have a video. You might want to go take a look at that. And if you want me to run the numbers in more details, we can definitely do that. But I'm a little bit concerned because if this is a total amount for you and your spouse all together, then maybe we need to have a conversation. But if it's just for you and your spouse has the similar numbers, then you're probably doing just fine. And I'm not really running any calculator. I'm just talking from my experience here. So all right. So now your primary question is about mortgage, but I do see few other things. So for example, one thing I do see is there could be other strategies instead of 529. There could be strategies for emergency funds you might want to consider. And then you said you have IRA and Roth total $100,000. I would like to learn more about that. Why too? Why do you have anything in IRA? And if you do, why have you not yet converted that into a Roth? So we'd like to talk about that. And if you're worried about taxes, then obviously we can come up with some interesting strategies to deal with taxes. So that's all good as well. You also have $180,000 sitting in 401k. Depending upon what kind of tax bracket you are in, we might want to convert some of that into Roth money as well. So, got to take a look at that. I don't know if both of you guys are W-2 or if one of you is on 1099 or some sort of side hustle, or both of you are on side hustle. I think knowing that piece of information will be big help as well, because a lot of my answers will change based on that. So that's what I see with everything else that you have mentioned. But to come back down to your specific question about whether you should pay down mortgage or invest. So let's talk about that. Currently, your mortgage interest rate is 4.25%. Historically, inflation in our country ranges anywhere between 2 to 3%. Right now, it's close to 3%. Earlier, it was close to 5, 6, 7%. So it's starting to come down. But I think it is fair to assume that in the years ahead, it will probably range between 2 to 3%. So if we assume that, and this mortgage you have locked in at $450,000. That means you're getting a discount on it every single year, because when you pay back that mortgage 2 years down the road, it has already depreciated by that inflation amount. So if I look at this and I say, okay, you're paying 4.25%, and let's say even if I assume that inflation is 2%, that means you're really only paying 2.25% on that mortgage. So question really here is, can you do better than 2.25%? And I believe you can do way better than that if you understand investing. But let's say even if you don't investing so much and you put something in, for example, ETFs like total stock market or S&P 500 or something like that, over a long run, you can easily earn 10%. So even after inflation and all that, you can probably still earn about 8, 9% on S&P 500. So why would not I let my earn 8 or 9% instead of paying down my mortgage that will only reduce barely by 2%? So I think if I were you, I would probably invest that money instead of paying down my mortgage. But I think big part of that question needs to be answered based on what is your emergency funding look like and what does your needs look like. Because you do have two kids, you have $190,000. You're saying that you're saving almost 20%. That means that means you have an expense of $150,000 a year. Let's just say if both of you guys lose your job for 1 year, that means you're going to need about $150,000 to survive. And you mentioned that you have no retirement savings. Once again, I don't know if they are in money market or they're sitting in the stock market, whatnot. I would like to get an answer on it, but we're still not at $150,000. So you might say, well, that's too aggressive. But unfortunately, I remember when we had a housing market crash, there were a lot of people who were unemployed for a year or even longer. Now you do get some unemployment and all that. So maybe you can argue back and say, you know what, maybe 6 months would be more than enough. Then we need about $75,000 in savings. So that's another area I would look into it. And then from this question, your tax picture is entirely missing. So I would like to review your tax return as well and see if I can find you some missing money there. Because oftentimes most people are paying way too much in taxes. If you do proper tax planning, there's usually a lot of opportunities out there. So although you're doing very well, I like the fact that you only have a mortgage of $450,000 and you have a home value of 620. So you have nice little equity there. Like I said, you have this no retirement savings of $120,000. Love it. And then you have a, almost $100,000. Let's assume that's all Roth. So I love that part as well. And you're saving for your kids' education. So I love that part. Um, you didn't mention anything about if you have any kind of term insurance at this point, because it's not like you're making so much money or have so much asset that if something were to happen to you, your kids will be taken care of. So that gets me a little bit concerned. You should have some sort of term insurance. Same thing for your spouse, because you don't really have that much of a assets that I can call you that you're self-insured. So that's one thing that does stand out to me. Also, I don't see what kind of planning you have done from a Medicare point of view. Like, once you retire, you will have to deal with medical. So what are you dealing with that? Um, but the good news is you don't really have any debt other than good debt, which is only your mortgage. So overall, I like where you're going, but you're 45 year old. So if you continue going on this path and don't pay attention to some of these other things, in another 10 years, you might have a hard time. This what happens. For example, let's talk about insurance for a second. What happens is, in 30s and 40s, we're still fairly healthy, but the moment we start hitting that 50-year threshold, we start to use medical a lot, we start going to doctors a lot, and now getting insurance becomes harder. Sometimes we don't even qualify for it, and if something happens, that can be devastating for the entire family. So I'm sort of a little bit worried about that. If I were you, I'll probably also look into real estate, because you have a lot of these cash accounts sitting. I think something that you can use as an inflation hedge, something that is tax efficient, would be pretty good. Some sort of good life insurance policy would be really nice, based on what I'm seeing. and good tax planning will come in a long way. And we should also look at the retirement planning along with it. So I think there's a lot of opportunities in this case to do proper planning. Although I think by your good decisions, you're doing very, very well, providing this is the only information and I'm not missing anything else. So thank you so much for sending this to me. I really appreciate it. And if anybody else wants to share their information, I'll be happy to give you my thoughts on your current situation. You don't have to tell me your name. All I need is your age, your income, your family, what does it look like, and all your finances information that you want to say. So that way I can publish it online. You don't have to put your name, although it won't be like, for example, I'm not really running any numbers live or anything like that. So for all that, you do, proper consultation call. It's the 1 hour call for $300, or you can do comprehensive call, which is about $1,500, and we look at into all different areas of your finances and try to make you a more optimized. How do you set that up? Just go to taxcodeadvisors.com and you can submit a request there. If you want to talk to me before you do anything, just want to set up a discovery call, you're welcome to do that. There's no charge for that. If I'm available, I will definitely connect with you and try to answer any questions I can. Other than that, I spend plenty of time helping the community. I do a lot of webinars, seminars. I'm always out meeting with people, so you're more than welcome to meet up with me and ask your question that way. But I think anything, if you want any kind of significant results, any kind of changes, it makes sense to look at your situation and you take down some serious notes and take action on those notes. See, right now, everything I'm sharing is very generic in nature. I would not advise you to act on anything because I think there might be a lot of things missing here. For example, we really need to talk about education planning for your 4 and 8 year old. I mean, $50,000 probably not going to cut it. And I don't even know if that's the right plan for those. There might be other efficient strategies. All right. So thank you so much. If there's anything I can do to help, don't hesitate to reach out.